there everyone, and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances, and you need to decide for yourself if it's appropriate to you. Okay, so our market pulled back a little bit today. No real surprise though, considering the strong movement we've had so far this month. So what I'm focused on right now is how far will this market pull back, if it will pull back any further. Overall, my medium term target really is this all-time high level back up at 71.63, 7200 thereabouts. But in the short term, obviously it looks like we could be taking a bit of a breather here, if not a little bit more of a pullback. The first target on the pullback that I'm looking for is 7,000. We've held that today, rebounded just a little bit into the close there. So at this stage we've held the first target to the downside I've got. If that level breaks, there's another level here, previous resistance and support around 69.50. So they're the two levels, okay? If we do take out both of those levels, guys, then we're probably going to head back down to maybe a little bit of a longer term trend line, and I can draw that in through here as well. And we could be heading back as far as around 68, 80-ish if it really wants to pull back to trend again. At this stage, sort of a little bit doubtful of that playing out. Looking at the futures market, the US futures are pointing up at the moment. It will depend on how I think the US plays out over the next few sessions as well. But by the end of this video, you'll understand the reasonings why I'm a little bit more bullish still in this market over the next few weeks or even over the next month. Okay, so let's jump first off. So over to the S&P 500. And really having a look at their market at the moment, they just keep pushing further and further and further into all-time highs. Now, I've identified a few levels close by here. It's hard to show you on a daily chart. I'll come down into like a 10-minute chart just to demonstrate here what I mean. Now, if the US market, which pulled back last night, you can see the pullback happened last night. It pulled back and held this 200 period moving average. Okay, you can see that on the bigger pullbacks it tends to hold that level. There's also previous resistance and support thereabouts here as well. So last night it actually on an intraday technical basis found a level. All right, if it breaks lower again tonight, I'm a little bit worried that the US market could have more of a substantial pullback, but at this point of time things are looking likely that it was just a bit of a breather inside. I actually wouldn't be surprised to see a few sessions of sideways through here before things start kicking back up again. So this is on a 10-minute chart. You can see it pulled back, found a bit of support on the intraday chart. If I come back over to the daily again, which is what I use to really look at things from a longer sort of medium term perspective, it doesn't look like much, does it? Okay, but it did hold levels through here and we saw a little bit of a buy up happen again. So tonight's the night, guys. If it breaks here for me, then it looks like it wants to come down a bit further. Once again, wouldn't be surprised at some point this market needs to pull back. It has gone a bit hard, a bit quickly, so a pullback is on the table. I just don't feel like the pullback is now. Alright, I just don't feel there's enough of a catalyst to cause that. I still think there's enough fuel in this fire to drive the US market higher and drag us with it. Now why? Okay, so there's a few reasons why. One, strong economic data. We saw strong data from the US over the last few weeks, but not too strong to have everybody worried about hyperinflation. Okay, so the data we are seeing is showing a recovery from COVID. Okay, we're seeing that out of the US, we saw that out of China GDP on Friday as well. We're seeing a lot of good forward indicators suggesting more strong economic growth to come. So everything is pointing in the right direction for an economic recovery, both here and in the US and quite a few countries around the world. So that for one is one of the reasons why I'm still bullish this market. We've seen strong economic data, but it hasn't been too strong to the point that we're sitting here worrying about inflation just yet. We've seen commodities push higher again, so copper's pushing back up near monthly highs. We're seeing iron ore push higher. We're seeing crude once again back up near 63 US. Other base metals are also pushing a little bit higher this week. So we're seeing confidence come back into that sort of value space where people are starting to look at things again and go, you know what? There's more infrastructure spending coming from the US. There's a lot of countries that are going to do infrastructure spending over the next few years to help boost their economy, which is all good for commodities as well. So commodities pushing higher is a sign of investors going back into the space where they believe that the economic recovery is on track. So that's also another positive. Now, the next positive is US earnings so far are beating expectations really, really well. And that's the next indicator showing that a lot of these companies that were hurting last year are rebounding. It's also starting to show companies that did well last year are showing growth. IBM was one of those key companies where they did well through COVID and they're continuing to look to do well after COVID and showing growth. So we haven't yet seen a lot of the tech stocks report. That was one of the first. This week and next week, we're going to start seeing more and more of that flood through. So reporting's everything. My view might change dramatically between now and next week based on the rest of this US earnings season, because we're right at the beginning of it. So US reporting is really, really important. Keep an eye on that. That could shift sentiment very, very quickly. But for now, it's very, very positive. Okay. The next point is obviously there's more stimulus coming, there's more light at the end of the tunnel for the US. The previous payments that have come out were more COVID aid payments to help people out that had lost jobs or were in between employment because of COVID, lockdowns and all that sort of thing. Now, the next infrastructure spend that they're talking about is more designed to boost the economy. And that's what's got people still excited, is that there's more money being pumped into the system in the US. You know, if you've heard my videos before, you know my view on stimulus is very, very positive for equities markets, right? The more money you pump into the economy, the more it's going to flow towards these companies. The more you have money in people's back pockets so they have money to buy shares. It's just going to flow that way, guys. The more that central banks have got are stimulating, the more physical stimulus and monetary stimulus you get, that usually always leads to higher equity. Right? High asset prices, high equity prices, stocks will tend to go up as a whole. Alright, so at some point that tap's going to get turned off, but we'll deal with that problem when that comes. For now, the tap is still on. There's still a guarantee, almost a guarantee that interest rates are going to stay low for a long period of time. So that is also all very positive for equities. Then this is the pendulum at the moment, right? This is the one that I'm really keeping an eye on in the short term for certain sectors of the market. Vaccine versus COVID, okay? So we know stimulus is coming, that's all fine, that's going to help offset lockdowns. But what we don't want to see is any worsening of those lockdowns. What has happened over the last few weeks that's probably softened the mood, especially amongst a large group of stocks in the local market, in the Australian market, is problems with vaccines. Okay, so got to keep an eye on that dynamic, that we're okay at the moment in Australia because we don't have many COVID cases. We actually don't have any community cases. We only really got cases that are coming from overseas in hotel quarantine. If that changes, that could really swing our market down now because there's no clear path forward on vaccines. Okay, so there's a little bit of a problem in this pendulum right now that we must keep an eye on, especially around travel stocks and the like. That especially if there's an outbreak of COVID here again, the market will react, I think, quickly to that. If we can get a clear path forward with vaccines and get people's confidence back up, I think our market's got plenty of catch up to do, because you can see how much we have dragged behind other world markets. So yeah, if we get clear path forward with vaccines, we can continue to see strong economic data. The Australian market's got a lot of catch up, guys. There's a lot of cheap stocks in the top 100 that could easily push us much, much higher than what we are right now. But we can definitely see the mood has mellowed out a lot over the last 3 months because, you know, keepers and seekers allowance is no longer around, all the subsidies and that sort of thing. And also, as I was saying, the clear path forward that we thought we had on vaccines is not quite as clear right now. Probably the only other thing I'd like to mention now is that we've got our banks reporting coming up early May, so keep an eye on that. Usually our market will continue to push up into that reporting, and then a couple of weeks into May, that's where it becomes a little bit dangerous for a pullback in the market. Okay, so that's the typical seasonal pattern. If we have a really strong April, we tend to give back quite a bit of that move in May. May is usually your bearish month. June's usually a bit of a here or there month, and then you start kicking up into July, August reporting again. Alright, so I would not be surprised at some point through May, towards end of May, to see a sizable pullback in markets, because that is a very common theme and a common seasonal pattern we see. But for now, guys, we're not there yet, so I wouldn't be focusing too much on that. I'll talk to that a lot more in further videos when we get closer to the point where it looks like we could pull back. Just keep it in the back of your mind though. Be prepared at some point in May to reduce your exposure to your bullish trades a little bit. Once again, not there yet, guys. I'm preempting a little bit here. We'll talk about that a little bit more in further videos. So thanks for listening in today. Have a great week. Thanks and bye for now.